Discuss these Fed minutes and labor markets now. I'm joined by Nadia LB Lassi, Senior Market Analyst, Equiti Group. Thank you very much, Nadia. Always a pleasure having you on ET Now. Now, dovish minutes really coming in from the Fed. Decreased risks to inflation. Labor markets are also at a better place, is a sense that seems to be coming out. So are the markets then factoring in one cut? And what do you really make of the minutes?
Hello, good to be back. Yes, markets are pricing in by 60% that we're going to see a 25 basis point rate cut in September and 30% 50 basis points. So there's still a division, but it's definitely lower than the past few months, especially after the very weak NFP payrolls that we saw. This comes in on the backdrop of, the rally that we saw post the kind of Black Monday that we also saw a couple of weeks back on August the 5th. I think markets are trading at a tight range today, but they're still intact, relatively really at high levels. I mean, the S&P is still above 5,600. It has rebounded almost everything that it has lost that day. So I think the more that we get clarity on this type of data, then the more that we're going to see markets factor in more than 100 basis point rate cuts by the end of the year.
All right. So more than 100 basis points of rate cuts by the end of the year. We'll come to that point in just a bit. But Nadia, there is a view coming in from economists that there might be a September rate cut, but it really depends on the data, given that just a couple of days back, there were really concerns that were raised about recessionary tendencies. How do you respond to that?
I think today the Bureau of Statistics, they have revised the number of NFP unemployment claims by almost 818,000 jobs. And so I think this factored in is enough, giving a prominent indicator that it's definitely time to see a rate cut in September, especially that a majority of Fed officials yesterday have mentioned that it is the appropriate time. And I think that's what all eyes are going to be on Powell tomorrow, to kind of hear the same tone, the same dovish tone that we are going to see the first, rate cut in September. So I believe that the first one may be 25. And if it is 50, that means that the Fed thinks there has been a delay in terms of performing the rate cuts.
All right. So you're stating that there's been a delay in, performing all of these, performing the rate cut, that much awaited rate cut. But Nadia, let me take your attention to, one of the minutes of the Fed that stated that the sentiment is twofold, that inflation markers had shown pricing pressures easing considerably. And let me stick to this point and take your view on whether then, does it really mean that inflation is yesterday's news?
I think inflation is still going to be in theme this year with what's going on in the market. We're still above the Fed's 2% target. So I think till we get down to at least a 2.5, 2.8 levels, then we can start being assured that inflation is in fact in the trajectory of going down. But so far, and we're not going to feel that till next year because it's a lagging indicator. So prices are going to still remain super high, especially on the back of higher interest rates for longer. So I think it's really about time that we see some rate cuts. I think stock markets are really going to take that in as an optimistic factor, and the rally could even extend further.
Absolutely, Nadia. So let me then ask you, the market had expected as many as 6 rate cuts this year. And now if we are expecting about 2 to 3, how do you see investors strategizing in the near term?
I think since almost the beginning of the year, investors have after Powell said that, rate cuts are solely data dependent, and we saw really solid and resilient numbers since the beginning of the year. I think when the slowdown started to happen, when we saw GDP go from 5% last year all the way to 1.6% in the last quarter. So I think all these numbers were solid enough to kind of align with the slowing down. So I think investors kind of knew, even there were a lot of sell moments, opportunities, and a lot of people did buy the dip eventually. But I do think that investors now are pricing in what we are seeing or what's to happen in this year, and that's at least 2 or 3 rate cuts. And I think that the first one's definitely going to be in September, because markets never lie.
Right. The markets never lie. Rightly put, Nadia. So all eyes definitely now on Fed Chair Jerome Powell's speech at Jackson Hole. But what are the big expectations? And let me put some context to it. I mean, there are still some concerns about a soft landing. And of course, there are expectations that volatility is going to persist because you have the presidential elections in November.
That's true. We went from factoring in a soft landing to another August the 5th, the hard landing returns to headlines and returns to the market and spooks out investors. And there was a lot of market panic. But I think the more that we see kind of the economic indicators gradually slow down as expected, like we've seen GDP at 1.6, so it only makes sense that we gradually see lower figures just as inflation goes down as well. So they're both in alignment with what the Fed knows and how it is data dependent. So I think this will in turn kind of ease markets into it.
All right, one final question, Nadia, before we let you go. And this is, of course, about emerging markets like India. So how should emerging markets be looking at this speech and, of course, the September rate cut, expected September rate cut?
I mean, I think the Nifty is going to track Wall Street gains. I think we're bound to see more gains in the stock market, just as we are hitting a soft landing even in emerging markets. So I think that as things play out smoothly and as they are factored in and we see rate cuts, it's definitely going to play out in the favor of the stock market, especially in the Nifty.
Thank you very much, Nadia, once again for taking the time out and speaking with us. All eyes definitely now on Jackson Hole Symposium and on Fed Chair Jerome Powell's speech and what he really says as far as not just the September rate cut is concerned, but overall on the state of the economy in the United States.